Welcome back. You're watching Indian Open right here on BloombergQuint Live. Let's take a look at how the Asian markets are faring at the current point of time. Nikkei is doing very well, led by Nikkei essentially. The screen is looking green, about 0.4% for the Shanghai markets as well. Hang Seng flattish in trade, and the SGX Nifty lying flat, absolutely flat. So nothing too dramatic on the SGX Nifty front. But the world markets are active, and which is our settlement trade setup as well, that we might well have that as a cue for stock-specific moves. I'll watch out for some financial names as well. We've spoken about Bajaj Finance QIP, and we'll talk about that a bit later on too. HDFC, which reacted quite strongly to its numbers yesterday. Remember, ended up about 2.25% higher, 2.5% to be precise. And the earnings received a boost from their stake sale in Growth Finance as well, as a high dividend income also helped. The non-banking lender managed to keep its asset quality stable as well. And now the key is the commentary from KK Mystery talking about better times ahead, or is it talking about stress? Now, Vishwanath Nair spoke to KK Mystery, and I believe in this conversation he had all of these points covered. But the key point that he began by asking him was about the factors at play in the quarter gone by. So we'll get a sense of what the quarter gone by was and what the outlook ahead is. Hear this out.
The numbers were good on the back of certain facts. First is the individual loan book growth continued to remain strong. So despite a very large base that we carried, our individual loan book was up by as much as 17% on an AUM basis. In the non-individual category, 5 or 6 quarters ago, we had guided towards lower growth. We continue to remain cautious in that segment. However, we are watching carefully. The moment we start feeling confident about it, we will press the accelerator and grow much faster in that. Our spreads were stable to slightly higher. Our gross spread in June was 2.25%. In September, the number is 2.26%. So very similar, just 1 basis points higher. Non-performing loans were again reasonably similar as the last quarter. June non-performing loans were 1.29%. September non-performing loans are 1.33%. And the 4 basis points rise that you see in non-performing loans has largely come in the non-individual segment. The other benefit we've had, as you said correctly, is the GRU sale. So to be compliant with the RBI directive of having not more than 9% shares in Bandhan, we had to sell some shares in GRU, and we realized some profit which has been booked in this quarter. Also, very importantly, the new tax regime. We have adopted the new tax regime. Based on the new tax regime, the tax rate has come down. However, we have foregone the benefit of MAT, which we had, utilized MAT, and also the deferred tax asset has now been marked to market based on the new tax rate rather than obviously the old tax rate. And that has resulted in a charge of 238 crores in this quarter to the profit and loss account in respect of deferred tax asset.
Just to get a sense of the non-individual book. Now, of course, I'll come to the individual part of the story. But when we're speaking about that, now the stress has been going on for a while now. This is not something that started this quarter. In terms of where do you see this going, and how soon do you think this should turn around? Because you said that you're ready to press the accelerator as soon as you see signs. What are these signs that you're looking for?
See, in the affordable housing segment, still by and large things are reasonably good, in good shape. The problem is as you get a little higher into the market, so in the mid-level segment or in the higher income segment, that is where the problem is the maximum. One of the causes for the problem is the unavailability of last mile funding. So what happens is typically in a real estate project, 60 to 70 to 80% of the project gets funded pre-funded. The remaining 20-30% historically used to come from sale of under construction properties. Right. Now, for a variety of reasons, people are reluctant to buy property today while it's under construction. So people tend to prefer to wait for the construction to get completed and only then buy the property. So that last mile funding which used to come from sale of under construction properties, that has slowed down considerably. And therefore you see a lot of projects which are 60, 70, 80% completed. Now in many of these projects, there is still a lot of equity that is left. It is possible for a new lender to come in and provide that last mile funding for that project. The only problem in doing that is that even though you may ring fence your receivable from that loan very, very carefully, and you would therefore be very safe and secure. From a regulatory standpoint, if there is a loan is classified as a non-performing loan, and you give even a single rupee of somebody else comes and gives a single rupee of loan to that project, straight away from day one, the loan has to be classified as a non-performing loan. So therefore, even though there may be equity left in this project, there is a reluctance on the part of buyers to lend money to the project. So that is really the issue.
Okay. How do you cut that? Because the government had suggested something of a real estate fund which would help these projects complete that last mile funding, but that hasn't really come into light yet. So how else do you take care of this issue?
Well, I guess the only ones who can really one way to do it is to make some changes in the regulatory environment, if that were possible. I don't know, but if that were possible, permit last mile funding for these projects, at least in projects where there is still so much of equity that is left over. That's probably one way of handling it. The other way is that I'm sure the government is working on the fund structure which they had, which the finance minister announced, and soon hopefully we will get the structure. We as HDFC would be willing to put in some money into that fund, and then hopefully that fund takes off well.
You talked about the individual loan book and specifically within that the affordable housing segment and how you're seeing a lot of growth there. For the rest of the book, apart from the affordable housing lending, for the rest of the book, what is the growth situation looking like, and if there are any stresses emerging from that? Because there again, 0.73 is a very small number, but compared to your book, but still, is there any specific area of stress?
To be very honest with you, we have not seen any. I mean, there's always going to be a little problem here and there. That has been the case for the last 35 years we've seen. But there is nothing happening today in the individual segment which causes us any serious anxiety. So I think not really there is nothing. It's only in the non-individual category that we need to be careful, we need to be watchful, and that is the reason we have been so very conservative in our provisioning. We built up a provision cover which is so much higher than what is required by regulation. From a regulatory standpoint, we need a provision on a balance sheet basis of 3,559 crores. 3,559 crores. Against that, we are actually carrying a provision of 7,313 crores. So we are we are more than twice what we are required to provide by regulation.
Well, that's Keki Mystery talking about numbers, and Devina, it showed in the way the market perceived the numbers to be yesterday, because the stock post the numbers went up and stayed higher. The commentary from Keki Mystery, even in the limited press conference, was optimistic, and right now he's not sounding negative at all.
Yeah, and that's what you're probably getting to hear from all of these larger guys, when they're coming out and talking about the outlook for the second half. It's not a bad picture that they're painting for you. So, and while obviously HDFC, has been the preferred bet, you've seen HDFC Bank, both of them being the key contributors to the index, doing what it's doing so far. But that doesn't stop people from entering the stock even at these levels. Let's talk about all of that and more actually with Mayuresh Joshi, Head of Equity Research at William O'Neill, India. He's joining in right now. Mayuresh, these high parentage, great value stocks keep getting more expensive and people are ready to keep paying.
That seems to be the case. Morning, Devina. Morning, Neeraj.
Morning.
So again, I think if you probably look at numbers and if you stack it up against their mid-cap peers, I think it's an exceptional set that they report quarter after quarter. So every quarter you probably assume that the base that they're working on, whether they'll be able to surpass that or at least manage that base. And these guys have been doing it very, very well. I think considering the liquidity and the risk averseness in the system itself, the better rated corporates like an HDFC, for example, Bajaj Finance, Bajaj Finserv, I think the kind of funding that is available to them, I think it's very, very easy compared to the others. So I think the others will struggle to get funds at good rates. So the borrowing probably goes up for the lesser rated players, which is probably not the case for these players. Because of their pedigree, I think the advances growth and the confidence in terms of reported numbers, specifically on the asset quality side, remains extremely robust as well. So I think it's a question about they being able to deliver quarter after quarter. Book probably remains very, very strong. And that is the entire premise why I think the markets are probably having more faith in times like these. So you might be giving better valuations or higher valuations. But again, I think the valuations probably remain justified if they're probably giving numbers the way they are. So yeah, HDFC probably remains a pedigree stock. So does Bajaj Finance, Bajaj Finserv.
Actually,
Yeah, I just wanted to, and since you were talking and delivering quarter on quarter, we've come to the midst of the earnings season. Anything that particularly surprised you with any particular company's numbers that you were watching out for and you were like, okay, they did well, or they didn't do well?
So I think the larger universe probably delivered to expectations. I think it's the broader universe that probably has surprised to a tad bit. So when you probably talk about certain stocks within the larger universe, I think Avanti Feeds, I think we discussed that last week as well. I think the stock had gone off radar because of what has happened in terms of US regulation, shrimp feed prices going down, so on and so forth. But I think it's shown a sharp rebound. And even in a situation where soya and maize prices had gone up significantly, I think they were able to maintain their EBITDA margins. And the commentary probably looks strong. Again, I think from a risk diversification perspective, I think the non-US markets stand at 26%. So they're clearly understanding the risk of staying with the largest market at this point of time. But they've delivered on numbers, which was to my context, I think a little bit surprising because I thought they might be under pressure. And if this is the case, I think they might continue posting good set of numbers. So I think Avanti Feeds is pleasantly surprised with this quarter.
just one quick follow-up, and then we'll get off to the research team. But since you mentioned Quality Financials and Bajaj Finance, the QIP, and the demand that is being heard of, do you think this augurs positively for the stock from here on at these valuations?
So I think Bajaj Finance, Bajaj Finserv, both in my opinion are looking extremely strong. Again, if you probably look at numbers, so Bajaj Finserv, for example, I think they've come very, very close to their pivot levels as per our chart checks. What they've delivered in terms of AUM growth, outstanding. The general insurance business was going to get impacted because of the floods in Maharashtra and Kerala. I think that has shown in their combined ratio actually surpassing 100%. So it lies at 102%, but it should probably come down. Life insurance tie-up with Axis Bank, I think that's a huge positive. The only negatives that I saw from the number was that the new business premium, specifically on the life insurance part, has remained stagnant, absolutely flat. Apart from that, I think the slippages, which increased 100 crores on a quarter-on-quarter basis, marginally considering its base and the balance sheet, I think they were the only two negative factors probably that played against them. But again, I think you're probably looking at capital raising happening at probably expensive valuations at this point of time. But they are going to fuel balance sheet growth and the advances growth because they need to continue growing at 30-35% to justify the kind of valuations that they probably have that the street is giving. So again, I think it's a classic trade-off between valuations and growth, but growth is coming. Valuations are on the higher side. I think the street probably still pegs valuations can still be a derivative in terms of the higher growth that they're delivering. So I think it's better staying put with quality names.
All right, we'll talk to you about a few more of those quality names, Mayuresh, but time now to go across to our research team to talk about the Bajaj Finance QIP that is launched already, and then we've got Titan, we've got Tech Mahindra reporting numbers, so all of that and more with our team. Nikki, let's start off with you first on some stocks and news and the numbers that came out.
Essentially, first one is persistent system where the company has reported steady quarter, but then profitability is way ahead.
Whatever you just.
Revenue came in essentially from the growth in IP revenues and net profitability. That number was higher by as much as 4.5% on consolidated basis sequentially. Mahindra Holidays, pretty much on the face of it, look like solid set of numbers. Revenue up by 7.7%. EBITDA is higher by 3.9 times. But that essentially comes on account of India's impact, where the finance cost and depreciation has risen by more than two-folds. The company with this has reported net profitability of 24 crore as compared to a net loss. Bharat Electronics, where the results have been below estimates, it's essentially the weaker execution and lack of orders which has dented the top line performance of the company, while higher tax rate has impacted the bottom line performance of the company.
All right, we'll come back and talk about Bajaj Finance, but then let's just get all the earnings out of the way. We've got Titan and we've got Tech Mahindra.
Yes, I'll start off with Tech Mahindra. Well, it's going to be a reasonably quiet quarter. And, as far as Tech Mahindra is concerned, we're likely to see an uptick of around 3% in terms of repeat revenues, of 1.1% uptick in dollar terms. And, also expecting margins to expand. Profitability could, however, come into just a tad bit of pressure. I think the highlight of this particular quarter for Tech Mahindra is the AT&T deal. So while it could mean an upliftment for revenues, we could also see a lot of investments being made towards this deal, which is why there could be near-term challenges as far as margins are concerned. That said, we're still expecting some sort of an expansion in margins coming in as far as this quarter goes. But what we're also also expecting is, well, a little bit of slackness in the enterprise vertical. That has been the case over the past couple of quarters as well, and it's something that we are expecting to continue in this quarter, and that is also going to be a key watchable. We're also going to see a rather wait and watch on the impact of the AT&T deal in terms of margins, and of course capital allocation along with the M&A policy is something that we're also keeping an eye on. Well, Devina, I'm going to move on and talk about Titan 2, and again, we already know from the quarterly earnings, or rather the quarterly update, that is going to be a very subdued quarter for Titan. Based on that, we're expecting no more than a 4% uptick as far as revenues are concerned. Sure, expecting some amount of expansion in margins coming in at around 11.2% against 10.6%. Net profits likely to see a jump of around 15%, but that is mostly on account of your corporate tax cuts. A very quick word on the jewelry segment, expected to be subdued. A 2% decline. This is after retail sales growing 7%, being cancelled out by certain hedges maturing. So it's going to be a quiet quarter for Titan.
All right, and we probably got a flavor of that in the update, like you said. Gujarat Gas, Amit.
Well, the numbers are expected to be strong compared to last year. The revenues are expected to be high by nearly 27%. The EBITDA is expected to see a jump of nearly 132%. Margins are expected to come in at around 15%, while the net profit is expected to jump at least close to 5 times to close to 199 crore rupees. Now, this is on the back of higher volumes coming in from the Morbi region and because of lower spot LNG prices. Now, if you see volumes, the total volumes are expected to be higher by 36% to close to 9.1 million metric standard cubic meter per day, while the EBITDA per SCM, that is the unit operating margin, that is expected to rise by nearly 73% to 4.5 rupees. Now, the net profit growth, that is expected to be also aided by lower tax rate in this quarter. Now, strong volume growth will be driven by the industrial segment, which comes mainly from the Morbi region for Gujarat Gas. However, if you see quarter on quarter, the EBITDA margins are expected to decline, and that is because of a price cut that the company had taken in the second quarter of financial year 2020. They had cut their prices by nearly 2.5 rupees per SCM for industrial users. Now, key things to watch out for from the earnings. Firstly, the outlook on expansion into new geographical areas and the capital expenditure allocation that the company is doing for these new areas. Along with this, the outlook on industrial PNG volumes and the pricing would be important to watch out for from Gujarat Gas numbers today.
All right, Amit, thanks very much for that. And we're saving the best for the last, Yatin.
Yeah,
the mega exclusive that we got a few days ago.
So last week we said that the QIP is most likely to open this week. Yesterday, post the market hours, the company informed the stock exchanges that the Bajaj Finance board has approved the QIP issue opening. Of course, the company also said that the QIP base price is fixed at close to 4,020 rupees per share, and a maximum discount of up to 5% according to SEBI regulations can be offered to this base price. So probably we are looking at a QIP price band of anywhere between 3,800 to 4,000 rupees per share. Now, what sources are indicating to us at this point in time that the total QIP size is close to 8,000 crores. More importantly, this will lead to a dilution of anywhere between 3.5% to 3.75% according to BloombergQuint calculations. And I tried to get in touch with the bankers who are directly involved in the transaction regarding the demand. The demand is quite strong. In fact, till today morning 7 a.m. The demand was nearly 2 times the QIP issue. So the bids of almost 16,000 crores have already been received by Bajaj Finance. So the response is quite good, equally from domestic institutional investors as well as the foreign and overseas investors. So the demand is quite healthy, and clearly for a small dilution, the book value accretion will be quite strong for a company like Bajaj Finance. So let's see.
And this will take care of their growth requirements for a considerable number of years.
Yeah, so the management thumb rule here is that whenever the leverage moves above 6.5 to 7 times, they do equity raising. Probably that lasts for 2.5 years, given the fact that they are also quite profitable, and that adds up to the capital adequacy. So clearly, quite strong is the demand according to sources as far as the Bajaj Finance QIP is concerned.
All right, Yatin, thanks very much for that. So we'll be watching out for all of those stocks and also watch out for how the stock opens this morning. But aside from that, Mayuresh, I want to come to you on Titan. When they gave their quarter 2 update, obviously the jewelry business disappointed, and you'll probably see that playing out as they report their numbers. But the stock actually, after seeing that brief period of slump, actually started to come back up. Do you feel that this could be an opportune time to probably look at the stock, even though this particular quarter may not be all that great?
So to a large extent, I think the street has gestated the news post the announcement that they probably did. Going forward, I think you're expected to see numbers probably play out, at least on the jewelry business, because gold prices have moved up, and that will probably play out in terms of lower EBIT and EBIT margins as well. But having said that, I think you're probably looking in terms of the forward working for this company. I think the belief that with wedding season coming around, and there are a lot more wedding days this calendar year compared to the last, the expectations of jewelry sales picking up and at least trying to compensate what has probably been a loss of volumes in the first half is something that the street probably strongly believes. What happens with the watches and the watches EBIT, I think that should probably hold up going forward as well. Valuations on the higher side, but hey, I think the street is probably looking at better numbers probably expected to come through in the coming few quarters. Clear disclaimer, I think this stock probably stays part of our core model portfolio holdings.
Okay. And we'll talk about a lot of results that have come out as well with Mayuresh, Persistent, there is BEL, there is NoSil, clutch of names that have come out. We'll talk about some of these, but it's also time to get in our technical experts on board for a quick perspective on the charts. Brijesh Bhatia, Head of Research at Dealmoney Securities, and Amit Harchekar, Director at Index Genius Investment Advisors. Gentlemen, both of you, good morning. Thanks so much for joining in. Brijesh, good going thus far. Could it be that the index will not move? What's an index position now that we've had so many days of an uptick?
Good morning, Neeraj. I think some time to some book profits in Nifty futures. So I think 12,000 will now act as a major resistance zone. If you look at the derivative structure, even weekly and monthly, both are indicating that the 12,000 calls has been the highest OI writing as of now. So that might act as a resistance zone. Even in yesterday's session, we made a high of around 11,989 and then back slipped to around 930 levels. And I think even if you look at the futures, it made a high of 12,000 after the news of Infy, and there was just a tick, and it was an unsustainable move about 12,000 levels, which is again a key psychological level. Second, if I look at the derivative structure, it has been resisting at around 88.6% retracements of the previous rally. And I think it will now act as a resistance zone. Even if you look at the technical pattern called bearish bed, it's visible on the chart. So I think I would take a short bet at current point of time, purely from a momentum point of view, and short futures at around 11,980, 995, keeping a strict stop loss of 12,035 yesterday's high, and look for downside targets of around 11,878. At 850 would act as a major support now for the recent momentum. I would like to book profits around 878, 880 levels.
Amit, what are you doing today?
Well, I would be quite cautious on the market, even at these levels. In fact, Nifty, if you see the price action in last 3 days, Nifty has formed a tri-star doji pattern. It is formed basically due to appearance of doji for last 3 trading sessions. What it indicates that market is into an indecisive mode at higher levels. However, from a trading perspective, the reversal is confirmed only once we see the prices moving below 11,905. So what we would recommend would be opening up short positions in futures only below 11,905 with a stop loss of around 12,050. We are looking for a target of around 11,600. Good thing is from implied volatility perspective, it has again started to stabilize around 15.5 to 16%, and we think this is a very good base levels from where the India VIX could go up. So we are expecting a downtick in the markets, especially when the bank Nifty is almost retraced around 78% of the entire down move. So we are looking for a major resistance around 30,800 on the bank Nifty side. So we are quite cautious, but as I said, we would suggest opening up short positions only below 11,905, which is the doji low of yesterday's trading session.
Okay, so short positions below a level at some. Amit, I'll come back to you. I would want to know what happened to the earlier short positions on which you had a stop loss as well, but we'll get to that in a bit. First, let's talk stocks. On to our special segment, Bloomberg Edge first, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, what's the stock on your radar today?
Morning, Neeraj. So we are looking at Kotak Mahindra Bank, and like most of the other technical analysts also mentioned, the setup is on the negative side, and should that happen, financials would be one pack that would be moving downwards, and Kotak Mahindra Bank being one of the names to watch out for. This is on the back of the MACD indicator giving a negative crossover. Like we always do, let's first try and understand what the MACD indicator is and how do you interpret it. The MACD is a trend following momentum indicator, and it basically helps you understand the relationship between the two moving averages of the price. How do you interpret it? You go long when when the MACD line crosses above the signal line, and you go short when the MACD line crosses below the signal line, which is what has happened in the case of Kotak Mahindra Bank. This is the negative crossover that I'm referring to, and in the lower panel we could see that the MACD line, which is the one in blue color, that has crossed below the signal line, which is the white colored line, giving that negative crossover. Now, additionally, as far as the price pattern is concerned and the price action is concerned, this is the weekly chart of Kotak Mahindra Bank, and while we've seen the stock move higher from the levels of 1500 to as high as 1650 on the upside, the RSI also has given a negative divergence. So the price is moving higher and the RSI has formed a lower high, which is another indication of weakness. We've seen two successive weeks of losses for the counter, which is its longest losing streak in almost 2 months. And again, yesterday we saw the stock came off from the highs of the day and ended very near to its day's low. All of these indicators, the MACD as well as the RSI forming lower highs on the weekly pattern, on the weekly chart, indicating that there could be further weakness that we could watch out for Kotak Mahindra Bank.
How well has this worked in the past, Yash?
So they've been 4 out of the last 7 times that the indicator has given a negative crossover. On a closing basis over the next 1 month period, we've seen the stock fall close to around 6% on an average over the next 1 month period.
Okay, let's then talk about some stock ideas from our technical experts as well. Amit, let's start off with you. What are the stocks you're recommending this morning?
Well, I have a one buy and one sell. Here the rationale is, if you see the ratio of Nifty consumption index to Nifty commodity index, that ratio has given a sell signal after testing the upper band of rising channel. It has topped out at around 1.5 times, and we believe now this ratio should be heading back towards 0.8, 0.7 in the coming months. Here, that's why we believe the commodity stocks are likely to outperform the consumption stocks. That's why we are recommended first buy call on ONGC, where it has given a very strong breakout above 144. We expect 138 to act as a very strong support, so that we have suggested as a stop loss, and we have a target of 156. Apart from that, even on WTI futures, yesterday there was a good breakout seen above $56, and we believe now the WTI futures could be heading back towards 74, 75 zone in the coming weeks. Our second call would be going short on Maruti futures. Here we are applying the same rationale that consumption index is giving you signs of picking out after retracing 78% of the entire down move. And since the ratio of Nifty consumption to commodity is also suggesting a lower bias, we are expecting all consumption stocks to underperform the markets. Here the levels would be, we are suggesting opening short even at these levels. Stop loss we are suggesting at 7,700 on a closing basis, and we have a target of 7,000 on Maruti futures.
All right. Brijesh, what about you? Your stock ideas this morning?
I will have one short and one long. Let's start with the short, as I have the negative bias on Nifty. My short is on Adani Ports. So if I look at the stock in the recent momentum, has in the last series has seen a highs of around 425, 428 levels, and in the ended below 400 levels. Now, if we look at the current series, we have seen shorts being built up in Adani Ports in the range of around 390, 395 zone, and now 400 might act as a major resistance zone, keeping in mind the OI structure as well and psychological level. Second thing, if you look at the momentum, it has breached the previous swing low, which has made it around 389 and back to around 391 levels. So one can look at a short opportunity around 391, 393 zone. This is the cash level, so simultaneously you can trade in the future. It is trading at 2 rupees premium. Look for targets of around 372 on the downside, and stop loss would be around 401. My second bet is on Torrent Pharma. So if I just look at the weekly chart, this is the first time in 2019 stock has made a higher low structure on the weekly charts. Second, if I look at the RSI, we have seen bullish range shift in weekly. Plus MACD has given a positive crossover and move above the integer line. Second, if I look at the daily charts, we have seen a good resistance zone breakout with volumes at around 780 zone, and it has been sustaining above 1800 level. So one can take a long bet at around 1810, keeping a stop loss of 1755 on the downside and look for around 1940 on the upside.
All right. Those are some stock ideas that are coming in from both our technical experts. Mayuresh, I want to talk about Yes Bank. Yesterday, obviously, you had Rakesh Jhunjhunwala picking up some stake in the bank. Do you feel that, this is, obviously retail investors tend to focus on this a lot more, but from an operational standpoint, from the results standpoint, from the fact that they've got that $1.2 billion in terms of a binding agreement, how does the dynamics change for an investor who wants to look at an yes bank?
So there are two aspects here, Devina. One is the capital raising that they have announced, right? Now the regulatory approvals are going to be key here because they are in dire straits of raising liquidity probably. So I think that capital needs to come into their balance sheet as soon as possible. Well, whether the regulators will approve that, who's the investor, that's one point that will act as an overhang till those approvals come through. The second aspect becomes numbers, and numbers were not great at all, right? So GNPA's asset quality have deteriorated. You probably need far more provisioning. Because even if you look at Q1 and Q2, I think the PCR has stayed at 43%. The management intent to take that to 60% means that there will be massive provisioning still required over the next few quarters. So in a scenario where I think the asset quality pressures still remain elevated, where the aging related provisions will come on the balance sheet, and when there will be requirement of accelerated provisioning as well to take that PCR up, I think you're going to take a hit on your book. So retail investors should understand. I think market investors buy it with a different perspective. For the stock to perform, I think earnings have to come through, which is not going to happen, right? So I think it is possible that the stock might retest levels, as I said earlier as well, of 80, 85, which was close to their QIP. But I think a sustained up move from those levels, I think, looks a little bit difficult at this point.
All right, that's Yes Bank, and we've got pre-open in a few seconds. The SGX Nifty absolutely flat, a marginal downtick of about 6 odd points right now. The Nifty 50 should come up on your screens. Pre-open suggesting about marginal uptick. Sensex is up closer to 1%. We'll wait for these prices to consolidate. Individual stocks then, and Yes Bank 9% higher. You just need a trigger, and it's a trigger-happy stock, and you got it yesterday. 72.75 on Yes Bank. Bharti Infratel continues its momentum after seeing that big sell-off over the last 2 weeks or so. Finally, a few days of resurgence, and it's up about 2.5% today too. Infosys clarification came in by the management yesterday. Prima facie, they clarified that there was, no discrepancies that were found, but they're still looking into the whistleblower complaint in more detail. The stock is up about 2.5% yesterday, saw an uptick of closer to 4% in intraday. Ultratech Cement, HDFC Limited continues after yesterday's good performance. 1.3% higher in pre-open. JSW Steel, all metal stocks actually yesterday were extremely active, and JSPL for one was up about 8.5% on the back of getting the Garner Palma block. You've got Coal India, Bajaj Finance, Tech Mahindra reports numbers today, that's up. ICICI Bank at 472 now, and then you've got the likes of Adani Ports, Eicher Motors, which are doing okay. Losing out is Tata Motors, GAIL, Sun Pharma, Bharti Airtel, and Reliance Industries, which is down closer to 0.5%. Currency is not doing a whole lot much. It's at 70.81, marginal depreciation this morning.
2 or 3 names. Persistent Systems should come up on your screen. A very good set of numbers, a bit of a surprise out there. Let's see how strongly the stock reacts. For now, a couple of percentage points. My guess is this will build up, but let's wait and watch. Mahindra Holidays on the EBITDA front as well. Quite a sharp uptick, and let's wait and watch if Mahindra Holidays reacts positively. 3% higher. So that's a good set of numbers. TCI Express, and you will hear the management a bit later on the show, but they came out with a good set of numbers as well. Let's see if the stock is reacting, maybe a percent in a quarter higher in trade. So that's the other interesting one. We will watch out for BEL, and let's see what that stock is doing. Poor numbers, much below estimates. For now, not reacting too much, but may react a bit. And then we'll watch out for a few other names. But let's give these rates a chance to stabilize and maybe talk more about them post that. Just want to mark the stock price of JSPL because that was the big one in yesterday's session. And let's see what it is doing right now. Maybe, just maybe, some more uptakes. In fact, speaking of JSPL, let's get in Nikki, who joins in right now with brokerages that are making of JSPL's Garner Palma win. Nikki, morning.
Morning, Neeraj. Actually, we also did a quick estimate where, according to our estimate, it will add to EBITDA by as much as 6% FY21 for that matter. Most of the brokerages have taken a hard out of this development, and they have said Prabhudas Leeladhar has actually gone ahead and upgraded the counter to buy from accumulate and has hiked the target price to 170 from 125 per share. It said that it's regained a coal block at an attractive price, and JSPL was the best place to maximize the value from mine. With this, the coal cost comes down by as much as 1,300 per ton, with an option to sell coal almost to an extent of 25% in the open market. Morgan Stanley also maintains an overweight on the counter with a target price of around 139 per share. Says that the company, however, would take another 3 to 6 months to get the mine operational. The win definitely is a positive, and they estimate the benefit could be potentially in the range of 5 to 9% of FY21 EBITDA estimates. They expect mine to partially replace e-auction imported coal requirement and linkage coal to extent. Edelweiss on JSPL, they have maintained the buy rating and they've suggested a target price of 145. They're saying that cost reduction and the ongoing volume ramp up are a double bonanza from Agare Palma coal block. They're seeing that as a double delight coming in for the company. They see reduction in the coal procurement cost to an extent of rupees 500 crore per year, and they expect a potential upside of nearly 7% to FY21 EBITDA estimates.
Okay, we'll watch out for JSPL. Thanks a lot for that. We've discussed this, Nikki, thanks for that. We've discussed this fundamentally ad nauseum. Before we talk about some other fundamental stocks, Brijesh, a quick thought on JSPL for somebody who initiated long. Is it prudent to stay long or book profits here?
I think I would prudent to stay long till around 150 to 155 momentum, and for a profit bookings around those ones, because we have seen multiple times stock registering around 160. And if you look at the previous breakdown, it was around 160 when price hit around 137. So now that support will act as a resistance zone. And I think 150 to 55 can be on card, and that would be the area I want to look book profits.
Okay, that's on JSPL. The stocks open up by about 1.5%. A few other names that we're tracking from the broader market space this morning at pre-open. We've got stocks like Sudarshan Chemical, which is up about 6.5%. BF Utilities, actually, last 7 days has been up about 20%. And today, again, another 5% higher for BF Utilities. Similar is the case with Shilpa Medicare. Shilpa Medicare is up 5% today in pre-open. The last 7 days, it's been up 25%. So a lot of these names in the last 7 days have been pretty active. Lakshmi Vilas Bank has started to move into green. Now you're seeing, after the stretch of lower circuits, now you're seeing the stock on upper circuit. And Indiabulls Real Estate, which is up about 3.7%, which is up 26% in the last 7 days. I want to also talk about Godrej Properties, and what do you expect from Godrej Properties numbers?
So it should be a stable set. So what they've delivered in the past, I think they should be able to do that. What probably happens in terms of the sales velocity for new launches, I think that is where I think the entire focus will be. The second element obviously is that they're very better placed, I think, if you probably stack it up against the other real estate developers at this point of time. So stable set of numbers expected. So I think anybody holding on should hold on. Clearly, I think what happens in terms of the outlook going ahead and the revenue recognition part in terms of the new guidelines, I think those are going to be critical, but I think this is one stock which is better placed compared to its peers.
A couple of specialty chemical stocks or chemical companies, and Mayuresh, if you get a chance to see these numbers, one of them is Sudarshan Chemicals, wherein the top line growth is okay, not that great, but the EBITDA growth and the bottom line growth, profit after tax, at 46 crores on the consolidated basis versus 24 crores. That's quite a serious jump, and EBITDA performances look strong too. Yeah. The other one is NoSale, wherein optically the numbers seemed okay, but the conference call, the management is talking about how the volumes will pick up in second half. Chinese prices seem to have bottomed out for rubber chemicals, and they expect margins to bottom out at Q2 levels and likely to improve with higher volumes. So two chemical companies. Do you track either of them? Yeah,
so we do track the sector very, very closely. Sudarshan, I think top line will be muted for the next few quarters, but I think the operating performance should improve. So I think the market targeting that they're probably doing in terms of export and the pigmentation that they're specialists in, I think they should show significant amount of improvement. But if you stack that up against its peers, if you do that comparison with Atul or Deepak Nitrite or to a certain extent in Aarti Industries, I think the ROEs are lagging behind because of these factors. So they report ROEs of around 12-14%. Okay. Deepak Nitrite is close to 27% in terms of ROEs. Aarti is close to 25%, and Atul is close to 20%. Now, when you've got a stacking in terms of valuations, I think Atul, in our opinion, probably looks best placed. Aarti has done a QIP. They have also got a huge order from an export market of $125 million which they have to execute over the next 9 to 10 years. So there is significant revenue traction expected there. But Atul, in our opinion, looks very, very good in terms of both margin accretion, ROEs of 20%. Deepak Nitrite to a certain extent, the phenol derivatives and the spreads thereof look a little bit doubtful in terms of reported EBIT numbers. I think Atul and Sudarshan probably stay in the list from the specialty chemical place. For NOSIL again, I think rubber chemicals and the play out there in terms of US markets, because China is probably still having curbs and so on and so forth. I think there's a huge potential out there. But if you probably look at raw material prices, they have come off. So they're probably entering into a fixed contract. So aniline is the key raw material that rubber chemical players like NOSIL use. They're probably using that over a fixed spread over benzene. So that should protect the downside in terms of input costs. But with lower input costs, they have to pass this through, which means low realizations as well. They've not given a very encouraging outlook in terms of volumes. So they've degrown minus 8%. It's going to be a flattish kind of a volume growth going forward in the second half as well. So I think it's going to be a little bit of margin curtailment, volume degrowth, realizations going down. I think there'll be better times to probably enter NOSIL, not at this point of time.
Okay, I just stand corrected there. Now, so FY20 volume guidance is a degrowth of 0 to 5% for the year at large. They just expect volumes in certain segments like export volumes to do reasonably okay.
Okay, and since we're talking about management guidance for the paint industry, Bajaj Paints reports numbers today. Very expensive stock, but when we spoke to the management of Kansai Nerolac, they're talking about growth of double-digit growth for the next 15 years to come. Obviously, I mean, that's a very long duration to track it, but they said last 10 years we've done it, the next 15 years we'll do it, and the market is just growing. In the next 3 to 4 years, it's probably going to become a 50,000 crore industry, and that's the time that you see most opportunity for these stocks. So if you look at Shalimar Paints, you look at Kansai Nerolac, Berger, Asian, which stands to be the bigger beneficiary?
So I think the better names within the decorative paints, so Asian, Berger would obviously stand to gain. And the statistics that the management is putting forth, I think if you look at the historical precedence, I think it's 1.5 times of the GDP. So I think if it's 7.5% that we are expected to grow, I think the volume growth should ideally be between 10 to 12%, which is very, very good for paint companies. The unorganized market, I think, and the market share gains that these players will do will also incrementally add on. Third, I think in terms of Rabi and the Rabi season, which is expected to be very, very good this time round, I think the repainting demand at the end of Q3, Q4 should rebound very, very strongly, which becomes a huge base for all these companies going forward. One can argue about valuations, one can argue about the kind of expensive derivative that they probably draw out with, but input costs are going down, volumes expected to remain stable, the expectations of double-digit volume growth coming through over the next few quarters should hold out in terms of reported numbers as well. This quarter, as I've always maintained, I think Q1 was a push through in terms of volume at the dealer end. It might just stabilize in Q2, and there is a huge impact of monsoons as well. But post Q3, Q4, I think the numbers should keep on coming out to be better. Asian Paints, Berger probably stands out of the interest.
Okay, minutes away from market open. Let's tell our viewers all that they need to know to stay ahead in trade today. First up, Bajaj Finance has launched a QIP with a floor price of 4,020 rupees per share. This is a 2.3% discount to Monday's closing price.
Steady growth in IP revenues helped Persistent Systems beat earnings expectations. On the other hand, Bharat Electronics earnings missed expectations.
Brokerages are positive on JSPL's winning bid for Garepama coal block. Morgan Stanley has maintained overweight at a price target of 139 rupees, while Edelweiss has maintained a price target of 145 rupees a share.
Yes Bank is in focus after Rakesh Jhunjhunwala acquired 0.51% stake at 61.1 rupees per share in a bulk deal.
And lastly, Tech Mahindra and Titan are the two Nifty companies reporting numbers today. At the end of the pre-open session, I just want to mark Mahindra Holidays as the other one, wherein the numbers look stellar. For a while now, the company has just not performed, but the EBITDA jump and the bottom line performance pretty solid. Revenues okay, but the cost control measures probably helping Mahindra Holidays, and the stock is duly up about 3%.
Yeah, but this is after a period of lull probably.
Yeah.
The entire segment itself has been sort of an outcast, not really focused upon.
Yeah.
But I guess that would probably show in the numbers as well. 1 month, 12% odd for Mahindra Holidays, 240 on the stock. We're just about 2.5 minutes left to go for market opening. I think Bajaj Finance is closed closing pre-open at 1.5% higher, so at 41.72, and Yes Bank at 70.3, which is an uptick of about 6.5%. And metal counters are once again in focus. Should actually just say SAIL once. In the last 2 days, the stock's been up 5% apiece, and today's session slightly more muted, about 0.25% lower. But a quick take on some of these metal companies, Brijesh.
I think we have already seen JSPL and VDL on the rally. I think I would stay with the SAIL as you have mentioned. I think 40 is a minor resistance zone which I said crossed and closed above those levels. So I think 44, 45 is the levels on the upside. I'm eyeing on SAIL, and one can keep a stop loss of below 39 on the SAIL and look for upside targets.
Okay, Amit, Harchekar, quick 30-second view. Yes Bank at 70. What would your view be?
Well, I would not be buying this stock. In fact, since the historical volatility has jumped up to 165%, I think the stock is likely to remain volatile. From a trading perspective, I would wait for a close below 64 to open short positions. At these levels, I think the stock will remain quite volatile. Around 71 to 72 remains the upper band of this resistance.
Okay, less than a minute left. Time now to get in the top trading call from our experts for the day today. Amit, I'll start off with you. If you had to bet on one stock for the day today, which one would that be?
Well, I would be suggesting buying a put option in Infosys of 680 strike price. It's trading around 13 to 14 rupees. We believe Infosys has attempted to fill up the falling gap. We believe the stock has still more downside from current levels. We are looking for a target of 635, 640 in coming days. So we are suggesting a stop loss of 4 rupees for the put options, which is trading around 13 to 14 rupees right now.
Okay. Brijesh, what is your top call?
Apart from Adani short and Floron Pharma long, I would go long on ABFRL. If you look at the momentum, has given a momentum breakout of pennant. Keeping a target of around 220 on the upside and 210 on the as a stop loss.
Brijesh, can you just very quickly repeat what stock is it?
ABFRL. Aditya Birla.
Okay, Aditya Birla Fashion. Okay, yeah. Aditya Birla Fashion is Brijesh's top call for the day. Gentlemen, yeah. Brijesh and Amit, thank you so much for joining in today and giving us your perspective. Next Tuesday holiday, we'll probably see you after that. But here's how the markets are starting off this Tuesday morning. About 0.25% higher for the Nifty, Sensex about 0.25%, and the Nifty Bank to about 76 odd points. So decent start, slightly better than what the what the SGX was indicating, mind you. The mid cap and the small cap indices will come up on your screen as well. About 0.33% apiece for both of these. So not a bad start. The breadth should be positive. Let's get individual stocks going. Start off with the index, and the heat map should come up on your screen just to show you what's moving and what's not. Let's start with the gainers because those are the principal ones. Yes Bank is up 8.5. Trigger point being Rakesh Jhunjhunwala buying stake. Let's see if this lasts. Bajaj Finance 1.7%. The QIP and the perceived demand that exists for that. So an expensive stock moves further up. Tata Motors 1.5%. Tata Steel 1%. JSW Steel 1%. FinServe after the 3% uptick yesterday, another 1% uptick, and Bharti Infra continues to rise and shine. I must mark HDFC, by the way, 2.5% yesterday, and another almost 1% move. So all of this is green, but the market breadth is almost even Stevens, and therefore important to talk about the losers. Sun Pharma on the back of weak numbers from Taro. We didn't quite discuss that, but Taro numbers were weak, and therefore that stock is correcting about 1.5%. Z corrects about 1.25%. Infosys down about 1%, and BPCL about 0.7%. So that's the nature of the losers. Not too many losers. Gainers are prominent, and Yes Bank is now no longer 8% up, it's just about 5%. Very quickly, a couple of other pockets I want to mark before I hand it over to Devina. Firstly, a couple of result reactions, Persistent Systems, TCI Express, a clutch of them. Let's see how they are doing. A flattish starts. Persistent, not so much, just about 1.5% kind of a move. At TCI Express too, just about 0.5%. Maybe the others are doing more. What about companies which are trading close to 52-week highs? And a slightly unusual set of names. Midani, flattish start though. Adani Power continues to rise another 0.5%, and Relaxo Footwear after the 4% uptick on results yesterday, another 0.5% right now. Devina, what are you spotting?
Mahindra Holidays on the back of its results, pre-open suggested a 3% uptick. The stocks opened 2.7% higher, so not bad going for that one. Aside from that, Indiabulls Ventures is up in the session by about 5% following that. You've got MTNL, and remember MTNL too has been up 40% in the last 7 days. So So there's been some amount of interest that's come into this counter. Then you've got the likes of an India Boots Real Estate, which is up 4.5%. ITD Cement is up about 5%. You've got the likes of a Max India. Remember yesterday's session saw Max India and Max Financial Services both gain 7% apiece. And Max India carries on with its gains in today's session as well. Should pull out a Max Financial Services as well. Max Financial is down by 0.25%. We've got HCL Info, which is up 4%. Then Shilpa Medicare on the results, which is up again about 3.5%. Bharat Forge at 479. Sudarshan Chemicals also on its numbers. Century Ply is up about 3.5% in today's session. And Varun Beverages reported numbers, I think, yesterday during market hours. Or the day before that, I'm not quite sure, but the stock has been doing well in yesterday's trade as well as today's session is up about 3% too. Losing out, IOB, which was up 10% yesterday, has lost 12% in today's morning session. KRBL has moved lower. Bharat Electronics is down on numbers. And then you've got the likes of an oil cargo, which is lower by about 1.8%. Motherson Sumi, South Indian Bank, and Godrej Properties ahead of numbers is down about 1.3%. However, market breadth slightly positive. I think it's almost 1:2 in favor of the advances.
Okay. Mayuresh, you already answered our question on the result which had surprised you positively, and that was Avanti Feeds. Any thoughts on Mahindra Holidays and the kind of numbers that they've posted? It's a stock that's, as Devina said, been in the cold storage for a while now. This quarter seems okay. Is it a flash in the pan, or would you believe this could be a start or a harbinger of good times to come?
So I think they are approaching the holiday season, right? So time sharing and the related aspects thereof should probably show further improvement. So let's give it one more quarter. But the stock that Devina was mentioning, I think, Varun Beverages, I think I find that stock very, very interesting. Apparently, I think this stock, as a disclaimer, is there on our global focus lists, which means that we do suggest to our institutional investors across the globe who are India focused for VBL. Strong growth. So I think it's an exceptional quarter, assuming that Q1 is the best quarter. So this should not have been such a great quarter, but they still managed to deliver both organically as well as the growth that we've probably seen both from the non-CSD verticals. Water, the Tropicana plant at Pathankot is probably out. So volume growth thereof should start improving. Finance costs have moved higher for Varun Beverages because they needed to do these acquisitions of the South and the West franchisees. But again, I think they've raised QIP and they've paid a large element of debt from the QIP that they've raised. So the expectations here are that the non-CSD volume should be reasonable, CSD volume should hold out because of better utilization of its plants. I think the fixed cost
of the competitive threat from Parle? I mean, obviously, Fruity and then the Butter brand, but these are just 2 or 3 products that Parle is giving it a tough competition, and not the rest of the pile, which it actually came in much later.
And somehow, I don't know if I'm mistaken, but I somehow always think that Coke and Thumbs Up have a stranglehold over this Indian cola market as well.
So they're trying to diversify. That's the whole point, Neeraj. I think the entire CSD market, I think they're trying to probably get into the non-caffeinated drinks. The volume growth will improve going forward because there, I think the entire health focus and where the entire synopsis of being more healthy probably stays into play. So they're going to create these drinks which are less sugar, less caffeinated, so on and so forth. So water volume should hold up, and there is a large market, I think, both for water, both for juices, as well as I think the kind of innovations that they're probably bringing onto the table. So I think it's very, very interesting. I think the kind of move that it has just delivered, I think if they're able to maintain and sustain this view at these levels, I think there can be even a stronger move over the next few quarters, in my opinion. So I think VBL is something that I've said as a clear disclaimer. It stays on our global focus list, and a lot of suggestions have gone out to our global institutional investors as well.
Let me ask you a difficult one. On your global focus list or otherwise, between Bajaj Finance and HDFC Bank, which one is a better buy?
So I think Bajaj Finance is on the global focus list. On our Indian domestic list, HDFC Bank remains as the top spot within the banking space.
So you covered on both accounts.
What about Z?
No, so I think we are trying to refrain away from that at this point of time. I think let there be something substantial coming up. So I think there's no point speculating or trying to put forth a number based on something which is assumed to come through. So let it come through. I think it's better waiting and watching for any event-based stocks like this.
Better safe than sorry.
Absolutely.
Okay, Mayuresh, pleasure talking to you. Thanks so much for taking the time out and being with us. Well, watch out. The clutch of names that we've discussed, Varun Beverages and Avanti Feeds is something that Mayuresh Joshi likes. Do watch out today. Some of the not NBFC, excuse me. Some of the auto ancillaries are doing okay for themselves. So, for example, I think I saw Bharat Forge doing okay for itself, 4.5% higher in trade. Do watch out for that stock. Ramkrishna Forging is about 3% higher. So some of these forging companies seem to be having a decent outing. But Mahindra Holidays, 6.5%. Strong move, fairly decent volumes as well. And on the flip side, Intellect Design, IOB, and BEL are the three names that you got to watch out for, correcting quite stiffly. Good time to get in. An important market voice. Andrew Holland, CEO at Avendus Capital Alternate Strategies, joins us right on our show. Andrew, good having you. Thanks so much for joining in. Neeraj here, good morning. You guys turned bullish at a very opportune time. Since then, the markets have given some very interesting, very decent returns. Do you continue to stay optimistic, Andrew, on the Indian bourses?
I do actually. I think there's a number of reasons behind that. One is that the earnings season wasn't so bad. Obviously, we're going to see if there's any follow through from the kind of the spending over the festival period. But the good news is that a lot of those auto stocks, auto companies, should I say, have managed to reduce the inventory. So things are looking a little better there. I still think that interest rates are going to fall in India, so that again is a tailwind for spending going forward. But I think the final piece of the jigsaw we're still awaiting for, which is obviously tax cuts for the individual, for individuals to get the economy really going. If I add all of that and then plus the global tailwinds of a US-China trade deal, I'm not sure if it's going to be a trade deal or a kind of a reduction in or removal of tariffs going forward, and then obviously you have the kind of the Brexit problem being again kicked down the road till the end of January. So a lot of the kind of global kind of headwinds which were there or worries have moved away. All of this kind of leads me to think that the US dollar will probably weaken from here. So what I think you're going to see is more money go towards emerging markets. One, because obviously a lot of emerging markets will be beneficials of the US-China trade, kind of tensions going down, and obviously because the dollar will weaken. So we'll get, our flows, because of our weightage, will get dragged up along with the rest of the world. So I think in the next, in the very short term between now and the end of the year, that the Nifty could easily get to around 12,500.
Mm-hmm. Okay, Andrew, the consensus was, and probably in some extent still remains, that the quality names do well. Just that the last 2 odd weeks, we're seeing this up move becoming a lot more broad-based. Do you reckon that will be a sign of things to come? The Nifty may do whatever, 12,500 or whatever it is that it does, but the broader markets will see a far greater uptick because of the depressed nature that we've seen them going through in the last few years?
I think initially it'll be selective because we're not out of the woods. It's not as though the corporate tax cuts will have such a positive impact to move the economy. So we still need those tax cuts for individuals, but for certain sectors and certain companies in the broader market, I think you will start to see good outperformance. The broader market, below the stocks which move the index, is looking more attractive. But I think for the broad market to move up as a whole, you'll still need to see evidence, or the market want to see some evidence that the economy is recovering, because these companies are all obviously operationally geared to the domestic economy. So we might be kind of 1 quarter away from the broader market really taking off.
Keeping up at that point, Andrew, while much of the conversation when we saw a lot of value depletion in the mid caps and the small caps came about to the fact that should not paint every company with the same brush within the mid-cap space. Similar, would you think is the case when things start to improve in the mid-cap space, and it is not just everything that will start moving up together, but just those quality businesses that have managed to stand the test of time, or probably gone through this period and come out shining, and that's the area you need to focus on?
Exactly. I think you've said it exactly the way I was thinking, is that it's going to be selective at the beginning because you want to get to those companies which either cut costs, kind of improve their efficiencies, and they'll be the beneficiaries as the economy turns up. So they will be the first ones that people will rush to buy, and then the broader market will just get lifted up along with the market as the economy starts to improve. So that's what I'm thinking. So you articulated it very well.
So far, Andrew, how has the earnings shaped up for you? I mean, what does this do for the yearly forecast for earnings?
So I think the tax cut actually kind of gave a bottom to the kind of earnings downgrade that we've been seeing. I mean, there'll be certain companies, obviously we still see some downgrades, particularly in kind of say the pharma sector. But overall, I think the results from the large companies have been there or thereabouts, if not a surprise on the upside. So I think maybe we got too pessimistic, in the kind of September period and early October, and then the results have been a lot more kind of buoyant than I think most analysts were expecting. So therefore, it's a nice backdrop as the economy improves to see, once we haven't seen for a long time, is to see earnings upgrades, and I think that will happen probably in the first quarter of 2020.
Andrew, I just want to get your, how do you view a situation where someone has identified a stock which has probably run up 50-60% in the last 1 year? I'm talking purely from the broader market spectrum, the smaller to mid-cap names. Stocks have run up, the growth potential is there, valuations have suddenly become too steep in the last 1 year, but these are value accretive businesses. So should one stop themselves from investing currently because of the fact that they've run up 50-60% in this 1 year, or the fact that they focus on the future and see growth accretion happening, and therefore in the long run, if you take a slightly more wider look at the price graph, this may not be a bad entry point?
It depends on the company that you're thinking about or thinking of investing, because if you look at, say, the QIP of Bajaj Finserv, I mean, it's been very heavily oversubscribed. Now you could say the valuations are very rich too, but as we kind of hurtle towards a $5 trillion economy, then where will Bajaj Finserv be in that environment? I'm sure it'll be a lot larger, and given this replenishment of its balance sheet to continue its growth, the ratings will continue to remain high, and the growth will remain high as well. So it depends on which company and which sector, but I would say that stick to the quality at the moment. That's where you're going to get the returns over the next 1 year. But increasingly look towards the quality kind of mid and small cap names, and then as a broader market moves, you can actually kind of dip down a lot more as the economy improves into 2020. So that's the kind of strategy I would be looking at.
Andrew, just one final question, and that is, how do you pin the world and what's happening there vis-a-vis what could happen in India? For the sentiment to stay positive, the globe needs to do well for flows and for sentiment. RCEP, not a big market moving event, but has happened. The trade war seems to be reaching some bit of positivity. Is the globe set up for us as well, or could there be challenges there?
There's always going to be challenges. I mean, we still have to see the finer details of any agreement between the US and China and how the market reacts to that. And really, what's said about phase two, if there is a phase two. One of the things I do want to point out here is that, for the US and China to have a trade deal, it still has to be passed by Congress, and that certainly won't be happening before there's a new president in the White House. And as we go into next year, you're going to be thoughts about whether Elizabeth Warren will have a good chance of becoming the new president of the US, and she obviously has a lot of noise around the kind of tax increases she would want, and that's something that Wall Street would not want. And of course, you've got the impeachment of President Trump, which again is gathering speed. So we're certainly not out of the woods, and that's why I think you're going to get a weaker dollar, which will be good for emerging markets. So that's the kind of shorter term. But going into next year, I think worries will persist. I'll give you one example. There's two leading brokers in the US. One is saying that the US could go to negative interest rates because they have a more negative view on the US economy, and one is saying the US interest rates could go to 2.5% to 3%. So there's a dichotomy in terms of views, and that's obviously will bring you more volatility as well.
Okay, Andrew, we'll leave it at that. Pleasure having you today. Thanks so much for taking the time out, and best wishes for the new year.
Thank you.
That's Andrew Holland of Avendus, important market voice, and stays bullish. I mean, they manage big money on Indian shores, and if they stay bullish, at least it shows the color of some large foreign money and what is that likely to do. Anyways, we take a break on the note that the markets are absolutely flat, but up next, couple of earnings conversations. Chandra Agarwal of TCI Express talks about their quarter. It was a good one, as was for Persistent Systems, and Christopher O'Connor in conversation about theirs. Stay tuned.